This episode is brought to you by Withum. Withum is a nationally ranked public accounting firm providing advisory, tax, and audit services to businesses on a local and global scale. More on Withum and their fast-growing crypto asset practice later in the episode. Today on the podcast, I sat down with Pelle Brændgaard, co-founder and CEO of Notabene, an enterprise software company that is focused on addressing the compliance needs of financial services firms that are engaged with crypto assets. Specifically, Notabene's product allows these firms to come into compliance with what's known as the funds travel rule, which is a much discussed regulation that stipulates that exchanges of value between two intermediary firms must identify the customer identity if the exchange is over a specified dollar amount. Prior to launching Notabene, Pelle and his team have a rich history in this industry, and it actually dates back to cryptography projects that predate the invention of Bitcoin. I wanted to have Pelle on to discuss his vision for Notabene and how he thinks this industry can evolve in a way that ensures that individuals can always self-custody their keys. I think you'll enjoy this one, so without further ado, here's my conversation with Pelle Brændgaard.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Pelle, thanks so much for joining us on The Brink.
Thank you very much, Matt. I'm really excited to be here.
Well, it's an exciting day. Today, you announced your seed round of financing that we led. So excited to talk more about the business and be able to give you the forum to speak publicly about what you're building, because I'm really excited about it. Maybe before you do, could we start with your background and how you got into this space?
Sure. Yeah. So I'm Danish, and I got into the web in the very early days of the web. I'm definitely going to show my age here, but I was the first webmaster at Alta Vista. So like back in a long time ago, and I got really interested in what was happening with the cypherpunks back kind of around that same era, and particular in the subgroup of cypherpunks that was dealing with money. So the whole financial cryptography world, which was, there were like David Chaum and DigiCash, and there's Ian Grigg with Ricardian contracts, those kinds of things. I was very fascinated by that. I started going to these conferences in Anguilla where I met a very, very young Zuko and Ian, David Chaum, and a lot of these kinds of people who are still in the industry today. So it was quite exciting. Everyone was figuring out what we're doing. The technologies were very different back then than they are now, but a lot of the same visions were there, right? About permissionless innovation, permissionless finance, anonymity, pseudonymity was probably a bigger deal back then than it is today, which is probably also what's driving Zuko to like do Zcash and those kinds of things, right? So my initial area that I was working with, I was also fascinated with offshore companies. I was fascinated with like company law, all of those kinds of things as well. So I was like looking at how could we, using crypto, using the very early nascent smart contract technology, how could we go in and create offshore companies that were managed and through cryptographically signing things, you could manage your shares online. So we built this system called CourtFlow, and we were integrating into Anguilla's, the little British island in the Caribbean. We were the first to have a fully online company registrar in the offshore world. We integrated into them as the first external integrator, and right when we were started getting ready to launch, Tony Blair had decided that all offshore companies had to have KYC done on all of their parties, and all of a sudden this great online service that we were going to roll out and launch in the year 2000, we were like, how the hell are we going to do this, right? And and after conversation with the head of company's house in Anguilla, kind of came to the conclusion there's no way in hell we can do this right now. So I at the same time I joined Deutsche Bank. Then I joined Deutsche Bank, spent some time there, and I got a really good insight into how all the mess that is like banking, payment, trading systems, all of these kinds of things within a very large global bank. And I kept tinkering on the crypto part of it, like how can we do these kinds of things without involving governments? I thought that would be cool. And eventually I left London to go to Panama to actually, after having watched The Tale of Panama, to start working at this technology down there. And I met up with an old cypherpunk down there, and we started a new company working on essentially something very similar to Ripple, and spent the next 2 years trying to get regulators to okay this, trying to get bank accounts, and failed on pretty much all their accounts. And even though we made a lot of progress on the technology and all of these kinds of things, and then this was difficult to do. So I just went back into like regular internet app kind of stuff in the mid 2000s and spent some time in Silicon Valley, those kind of things, until Satoshi came, and everything started to get exciting again. Yeah,
that's a great background. What were those early days? You mentioned the cypherpunk movement, and as you were talking about some of the offshore entities, I was thinking about Neil Stephenson books and Cryptonomicon and some of the kind of the ethos that was driving a lot of that participation. I mean, was there kind of an overarching goal with that community at the time? Was it, as I read about it, it was less about the creation of non-state money than it was initially around like remailing systems and privacy. But would you say there was an overarching goal that group was building towards?
So there was a subset of cypherpunks that some people call money punks and some people call financial cryptography. And we were focused on the monetary aspects of it. And there was definitely this ethos around non-governmental money. So there was a very, very huge group of people involved in that space who were like also very like gold nuts and all of these kinds of things. And eGold, which had just came out, I think they launched in '95, and which was obviously completely centralized system. You interacted through an HTTPS API and all of these kinds of stuff, but they were kind of permissionless. You could do whatever you wanted to. There was a ton of creativity with it, and people, because of that, just like Bitcoin and Ethereum allows you to innovate. Now there's a ton of innovation on top of eGold there. So a lot of people built like digital bearer certificate kind of systems on top of eGold. And so a lot of kind of derivative crypto systems on top of that. Of course, eventually the DOJ got them, and it's still like one of the favorite cases of the US regulators. Like they keep bringing up the eGold case all the time. It's why you need to implement KYC and any money laundering kind of cases. But yeah, there was that, yes, remailers, PGP, all of that kind of stuff. But then there was this additional kind of, let's start getting creative with money. And there were some cool things happening back then.
And at what point did it start to become, clear that the centralized solutions were not going to work? I remember eGold, obviously, was a high-profile one. Liberty Reserve, which I believe was built on eGold, got taken down. Yeah. DigiCash didn't work out. And then there was sort of this trough of disillusionment maybe before Satoshi. So what was that time period like?
Yeah, so DigiCash probably could have worked. There were, and they were working with a lot of large banks, but I think that was actually ultimately their downfall, is that while Deutsche Bank, I did meet like the head of private banking for Deutsche Bank at one point, and he said, but we do innovate. We had 6 million users of DigiCash in Germany. And I'm like, okay, that's pretty impressive. But they also didn't push it out into everything, right? So So I think it was more kind of like an innovation department kind of thing, right? But all the kind of like more crypto anarchic kind of work ended up just living in SourceForge repos, later GitHub repos. So people were coming up with all of these kind of like approaches. Yeah, you can do this. You can create your own kind of like, digital currency. You doing this. You just need to deploy it somewhere and then run it. And I kept like asking all of these very smart people who develop these technologies, well, why don't you deploy it somewhere? Well, I live in the US and I just saw what happened to Eagles and I can't do it. But anyone who wants to can take this and please do, right? So there's a lot of projects like that. And I actually initially dismissed Bitcoin as just being one of these guys publishing code, but scared to actually deploy it. And so I was a little bit dismissive like the first year or so about Bitcoin because I just put it into that bucket, right? Because the centralized part, we learned that like the original theory was, offshore works, right? We'll just place our servers in Anguilla or Cayman Islands or Bermuda or whatever, and then the US can't come get us. We can do whatever we want. And that hypothesis like kind of failed pretty quickly, and I don't recommend anyone take that also for crypto exchanges. And I know, of course, a lot of exchanges have taken that approach also, but you can't do it forever. You can't keep moving and running and doing those kinds of things.
Yeah, it hasn't been a winning strategy over the long term. It's interesting what you say about dismissing Bitcoin, because it's something that I've heard a lot of the cypherpunks talk about. I believe even Adam Back was a little bit late to Bitcoin, even though he was very early in that movement. So when was it clear to you that Bitcoin was the real deal and that this was something worth paying attention to and that there was kind of an industry developing here?
Yeah, when I finally understood the idea of it, the idea of the blockchain, the idea is that there wasn't like a central server hiding. Like it was back when everyone still thought Satoshi was some Japanese nerd, like I when I realized it's not this Japanese guy running Bitcoin from a Windows server in his apartment. I started actually, oh, wait a minute, this is very, very different. And this actually solves all of these things. And I've seen all of these companies try to do these centralized cryptocurrencies and failed at it because they will always get you somehow, right? And he had this fix to that, and it was so elegant. But it took me a while before I actually read the paper and I actually grokked it. So I mean, it took me probably about a year or something like that. But and that's when I saw, oh, this is actually interesting. But it also was like, will we be able to create real value on this? And I did believe in that. But so I started looking at integrating it into some business ideas that I was working with. I was playing with something I had a startup called Pico Money, a small bootstrap startup where we're trying to do essentially personal currencies, those kinds of things that are like all popular in the Ethereum world in a completely centralized way, right? So, trying to get people to start getting creative about issuing tokens around at that time. And then I was like, after I finally grokked Bitcoin, we need to stop all of that. And this is way more interesting for it. And I started figuring out how to build businesses on top of it.
And what was the path that led you to Consensus and the Ethereum community and starting Uport? And I guess what is Uport too?
Yeah. So I was a brief stint where I was working on building a Bitcoin service, Bitcoin wallet for the sub-Saharan African market to compete with M-Pesa. And I kept getting into these kinds of issues again with identity, KYC, all of these kinds of things. We were shut down. We had the honor of being the first to get shut down by M-Pesa, and I was called in to explain this Bitcoin thing that we've invented to the central bank. And I just realized it's so difficult to do anything without solving the regulatory aspect part of it. And I had been involved with identity through multiple things like OpenID and OAuth, like a few years earlier, like as part of founding some of these protocols. And I didn't really like working with identity, but Joe Lubin from Consensus, he reached out to me and said, come help figure out how we build identity. at Consensus, we want to do this thing called Uport, which is identity on top of Ethereum. And I was initially very dismissive. I was like, oh God, I don't want to deal with identity again. The identity projects always fail. They always become centralized, all of these kinds of things. I'd much rather work on some of the other interesting projects that they were working on. But in the end, he said, just try it. And then you can switch to something else. And then it took me like about a month to do the first proof of concept, and like to actually, I can see how this could work. I can see how we could use this. And like for me, the big use case was always about using it for KYC, and then tying KYC to a non-custodial address that you were using to interact with a smart contract. So this got me really excited. So after the initial proof of concept that I did, probably more than anything to just prove it to myself that this would even work, right? We started building it in earnest, and it became, I was there for about 4 years. We really experimented and iterated, learned the hard way not to put private data on public blockchains, learned that you don't necessarily want to have multiple transactions when creating a new identity, just for scalability reasons. If you're trying to build tools for billions of users, you may not want each user have to create a transaction on the Ethereum blockchain to be able to do that. So we learned a lot of things the hard way. And then when we finally we felt we had the tech pretty solid, we started looking at applications, and as typical in the blockchain space back then, in 2016 to 2019, every single innovation department of every single company reaches out and wants a demo and wants to talk. And there's very little like real business. It's just like talking, right? And I was really like, this is cool. I'm glad I'm talking to this and this bank, or this and this car company, or this and this like education, whatever. But let's use this for like real business kind of things. And eventually I decided, together with my co-founders and all of my co-founders, we worked together at Uport. Oh yeah, Uport, by the way, it's a decentralized identity platform. And the goal for it was always to be able to tie identity to blockchain transactions, but in a privacy preserving way. So you could start having the kind of identity concepts that you're used to in more traditional finance or traditional apps in the DApp or finance kind of world as well. And the idea is we developed a wallet where you can maintain your identity credentials, and at the same time you could interact with Ethereum.
It's the regulator showing up at your office.
Exactly. The black helicopters.
Yeah.
No, but so we were, that was the overall concept. Like, users control their data, their identity, all of those kinds of things, and then they can tie that to blockchain accounts, and through a process, through a UX that's somewhat similar, if you squint, to say Facebook Connect. And then tie that into these blockchain applications. And the Ethereum world back then, and probably to a certain extent still, it's so easy to build things on Ethereum. So there's a lot of people kind of reinventing things that we did. There's a lot of people, it's much more fun if I do this myself. So, but we created like probably one of the first multi-sig wallets with on-chain recovery aspects. We were able to have decentralized identifiers, verifiable credentials, all of these kinds of things. All of that is open source right now, and people are using the same the tech that we did for a bunch of different products. But unlike, like, we had planned this is like perfect for Web3 for all the dApp developers to use. But the ones who were really interested were like, banks and governments. I remember the first time we did a demo for a government, it was a large non-Spanish speaking country in South America, where we were demonstrating how they could use decentralized identities. And we learned about the chaos that operates within a government with 10 different identity silos, 10 different identities that every citizen had to have within this particular country. And using the idea of user-controlled data and blockchains, you could actually let them take control of this. And this was like a huge like eye-opener for me that, this wasn't just for like cypherpunks. It wasn't just for like, decentralized apps, all of these kinds of things. There's like real business use cases for this. And that's actually where Uport ended up going. Most of the technology there is not really used that much in the Web3 space, but it's the basic technology is being used by, like, the EU is rolling out a project for integrating all the different digital identity systems across the EU using this tech. So it's kind of cool that this happened. But
yeah, it's interesting because, you talk about doing all of these R&D lab presentations and things like that. There's so much innovation theater that was happening during that time period where people just, you wanted to be able to say you were doing a blockchain project, not a crypto project, but a blockchain project. But, if you look at identity, that's something where the use cases really go across just every industry under the sun. And so you could, you really could be any type of company in the world. And my guess is that at some point you're going to be integrated with an identity system tied to a public blockchain. So it might just be a matter of when we get there.
Yeah.
If you're a regular listener of this show, you know that we take accounting and auditing pretty seriously. And that might seem a little bit strange in an industry that prides itself on the removal of intermediaries, but we think when it comes to digital assets, trust relationships with counterparties like custodians and brokerages is critically important. Withum is a top 25 ranked accounting, tax, and advisory firm. They have a digital currency and blockchain group that's working with some of the highest profile companies in the industry on things like tax advisory, financial statements, token sales, stablecoin audits, and much, much more. To contact their team, go over to withum.com/crypto. That's withum.com/crypto and get in touch with someone on their team. Now back to the episode. So from there, you kind of come up with the idea of Notabene. And so why don't you tee that up and talk a little bit about the company, what was the impetus to start it, and what do you do?
Yeah, so there are several of us. We all work together at Uport, like all of our co-founders. There are 4 of us, and a couple of us had gotten a little bit tired just working on out pitching protocols and pitching innovation departments, those kinds of aspects. And we actually wanted to go in and build a real business and not an open source protocol, and actually solve some of the real problems that we had seen. Like, we've seen a ton of people have these problems. I mean, we'd felt this ourselves. Like, my co-founder, Andres, he ran the first Bitcoin exchange in Chile, and he kept losing access to banks one by one. All of them cut him out, right? Because of lack of a regulatory framework, no travel rule, all of these kinds of things. And that's the same that happened with us with Kipochi in Kenya. So we felt these issues, and we felt we needed to actually start solving these issues. We had a lot of good learnings from building Uport, and a lot of the tech that we designed, a lot of principles there we can use. I mean, they're all great open source protocols, but we came at it more, let's actually step back. Let's not try and find a problem for the tech. Let's actually look at what the real problems are. And we actually saw one of the most fundamental issues for compliance and for many other parts of really bringing blockchain technology, whether it's cryptocurrencies or DeFi or any of these kinds of things into mainstream, is actually building trust in transactions. Who is behind a transaction? And when I just want to stress this is not about putting identity information on the blockchain. Not at all. And it's also not about implementing KYC or permission blockchains and all of those kinds of things. And we are huge believers in public blockchains that are not permissioned, all of these kinds of things. They're decentralized. They don't need to be permissions. They don't need to have KYC. However, anyone who's interacting on top of that blockchain needs to know who they're interacting with in many cases. Not all cases, but for example, if you have Bitcoin on your Ledger Nano and you want to send it to an exchange, you want to make sure you're sending it to an actual exchange, the one that you are trying to send it to. You need to know this, and there's really not a good way to ensure that kind of trust. And also if, what happens if they lose my money? We're in an industry where no exchange has ever lost their customers' money. There's never been any fraudulent exchange at all, none of those kinds of things. But there's a lot of importance, we believe, in actually understanding who is behind a particular transaction. And that can be done at a peer-to-peer level. Like, I want to transact with you. Who are you? This is me, right? And now we have that exchange. And from a fundamental part of it, that is also core at solving a lot of the actual compliance issues that people have in this space, because a lot of the compliance tools people use are set up to work in a bank environment, and banks operate very differently than crypto exchanges do, and the compliance issues, while they in theory are roughly the same, like in practice they're very, very different, right? And so a lot of the people who came from banking and were starting to work on compliance, first of all, is a huge learning curve for them. But then all of these many years of experience I had in, like, for example, doing AML, doing analysis of transactions on and within their existing systems, they've had to learn a completely new way of doing this. And also a lot of the tools weren't there. I mean, we thank God we have Chainalysis and these kinds of tools. I know a lot of people don't say thank God for Chainalysis, but I say thank God for Chainalysis, because Chainalysis had probably done more than any other single company to legitimize Bitcoin in the eye of regulators, because they've said this is actually so much better than what I've always called the real dark net, which is like the actual financial backbone behind the banks, like with the mixture of payment messaging systems, settlement systems, correspondent banking, all of these kind of things. It's extremely difficult for people to actually, if you're doing an investigation, to actually follow that information in the traditional world. With something like Chainalysis, is really easy. But there's missing one part here. Like, Chainalysis has this public information, but there's also like, who is my actual customer? Who is this person that I interacted with? If you actually know that, that's kind of the final piece. Then we start actually having something where I think regulators will be very happy with it. And just from talking with regulators, I think for them, travel rule and a few of their other concerns, together with Chainalysis, means that they actually have a way better tool, way better place. Like, they see it as being way less risky. If we can just get past one of two like little headaches here, than the traditional world. And I think this is going to help push blockchain, whether even if it's just central bank digital, currencies, together with Bitcoin and a few of these alternative kind of layers next to it. I think this technology is open, and the regulators are open for it, and even banks are open for it.
Yeah, that's a great point. And kind of how I think about this space is it's an open technology. These are public blockchain assets. People can engage with them however they want. You'll have people that engage in a completely self-sovereign way, and they will do transactions peer-to-peer without a third-party intermediary, and that should always be something that's possible.
Exactly.
It's
always
the equivalent of cash. In any effort to clamp down on that, I think, would be a terrible thing for the industry.
I agree.
Now, at the other end of the spectrum, this is a financial asset, and in the same way that individuals can have the ability to treat it and hold it however they want to hold it, financial firms are going to want to hold it in a way that makes them feel comfortable, in a way that they hold other assets. And so if you think about kind of the history of this industry from a financial market infrastructure perspective, I would say we're going category by category to address these needs. And so the first thing was, well, I need a custodian, and none of those existed, 4 or 5 years ago. So, hey, I can't do anything. Well, that's starting to get chipped away. We have some big custodians in the market. I need trade execution. I need the ability to go out and do direct market access and OTC buys of this, RFQs. Boom, that gets built. Then I need things like network forensics. I need to know that my customer is not taking money from a dark marketplace and moving it onto my platform, or they're not engaged in illicit activity. Chainalysis comes along and addresses that. Now, there's one category that's always sort of been out there and people have not been able to address it thus far, which is around this travel rule and enforcing the ability to actually send data about a customer transaction when you're doing a transaction between a brokerage and another brokerage. So, if you're sending $1 million of Bitcoin from Fidelity to Coinbase, being able to look through that transaction and for those intermediaries to know who's behind that $1 million transfer, which, that's how I think about the travel rule. I'm sure it's much more broad, but maybe speak a little bit about that travel rule specific use case and how that's being addressed right now in the industry.
Sure. No, it's a really good question. I actually, I came from when I first, read about the travel rule, applying it to blockchain. I was like many people in the industry are like, well, you can't do that on Bitcoin, right? And because the initial thing everyone goes to is, oh, we have to solve this by attaching this data to a transaction. And no, you don't really. There's other ways of doing it, right? And just basically a travel rule, just as a very, very brief explanation of what it is that a originating VASP or an originating exchange, when they send a transfer to an account at another exchange on behalf of their customer, they have to provide information about their customer to the other side. And that's basically what the travel rule is. I think one of the big problems that people have when they look at the travel rule is that they look at it, oh, this is just another annoying requirement I have to do. This is not compatible with Bitcoin, privacy, a lot of these different kind of issues come up. But it's a tool, and it's intended to be a tool. I believe the regulator, I believe FATF, I believe FinCEN originally, they started requiring this specifically because without this, how can you perform sanctions checks? How can you actually properly perform KYC and AML on a receiving in a receiving institution side? And that's really what it's set up to do. So it's not about transferring information from point A to point B, which is what most of the protocols are concerned with. And there are a lot of different, I can get a little bit into the protocols afterwards, but there are a lot of different protocols who are set out to solve this issue. But they're all really they're kind of like SMTP, the email protocol, right? So it's like, here, I want to send this message to you, and here's the details for it. That's how the industry has looked at solving it as a whole, but there's so much more to it than that.
And so we're kind of at this point where the industry knows that this is a problem that needs to be solved. There's been some very clear guidance to get in compliance with this. And now we're sort of at the phase when you say protocols, I kind of think about these as almost like the Swift equivalent in this industry to solve it. And you have a lot of efforts maybe to own that protocol, and maybe some that even think that that's a business model to own the standard. You guys have taken a very different approach, really just selling enterprise software and kind of taking an agnostic view and, hey, we'll see which protocol wins and we'll aggregate all of them for now. How do you, obviously you have a view on how this unfolds, but how do you see these protocol wars, so to speak, evolving?
I think we're going to see a lot. We'll probably see a couple more protocols in the next year appear, but there are several different protocols. All of them were created to solve very specific reasons. So OpenVASP, which I think is the most complete of the protocols, came out of the Swiss crypto banks like Seba, Signum, those guys, and it's designed really about how do we get exactly the same functionality that we have in banks for managing risk around transactions? How do we get that and apply that to crypto? And it solves it very, very well. However, it's a difficult thing to implement for many crypto businesses. Then there's TRP, which came out of Standard Chartered, ING, Fidelity, and a few other large institutions are part of it. It's designed to work. It's a very simple protocol designed to work between very, very trusted institutions, but not as a general purpose kind of open protocol. But it allows ING to send a token transfer to Standard Chartered fairly easily and safely because they trust each other and have perform due diligence on each other there. Teresa is another one that comes out of CipherTrace. and they're pushing it. It's an open standard, and it's a pretty good standard there. I haven't seen anyone actually say 100% that they are going to use it, but there are a lot of people testing it. But we will likely support that. We're planning on supporting pretty much any protocol that actually has at least 2 entities that actually want to use it in production. We will support it. It's easy for us to switch in. Finally, actually, another interesting one is the U.S. Travel Rule Working Group, which is where it's been led by Coinbase, and it's a very, very U.S.-centric approach where instead of solving the FATF travel rule, it's focused on solving the FinCEN travel rule, which is roughly the same kind of thing, just different transaction limits until recently. But it's designed from a very U.S.-centric point of view, where I'm only ever sending transactions to exchanges within the US. And we're in a very international business, so anyone who implements the US Travel Rule Working Group, they also will have to implement multiple other protocols. So it's I don't think there's going to be one protocol that's going to win for a while, but eventually we'll probably have a couple of them. But with us, we saw so much confusion from compliance officers who were handed white papers and like, read this. And they're like, okay, so the package should be this large and blah, blah. You know, they're not necessarily technical people, they're compliance people, right? And sitting to evaluating these technical protocols has been a nightmare for them, and they've been confused. And this is actually, frankly, what stalled a lot of the rollout of the travel rule. So we decided to just solve it very simply, like we have a switch on top of it. And if you're trying to interact with a counterparty who hasn't picked a protocol yet, or isn't on our platform, you can easily initiate a transaction. As the originator, you can send out a message to any other kind of VASP initiated through an email. Obviously, we're not sending private details through an email, but you can initiate through this, and then you can actually start implementing the travel rule with all your counterparties, all your current counterparties and new counterparties, even if they have no interest in solving the travel rule right now.
That's great. So what does the product look like for the exchanges and the brokerages that you're onboarding here? How does it actually work?
So we the first thing that we do is that we build up a profile for the VASP. So we help verify some basic information about who the business is, what the regulatory status is, etc. And this is actually an area that we're focusing a lot on. We're expanding out a lot on this because this helps solve the due diligence aspect of it. So once you've done that, you can actually start receiving travel rule transactions without integrating anything into your back end. So it's a very simple solution that we've had customers sign up, 15 minutes, they're receiving travel rule transactions. And often compliance officers, they complain, the technical team, they never have time to prioritize their work because, it's like some new commercial feature to support some kind of new protocol, or, add a compliance function, that they're not super excited about. So we've made it as easy as possible for the technical team to integrate. So with just 1 or 2 API calls, it can strategically be implemented into the backend, either as what we call a passive implementation, where you're being part of the travel rule transaction, but you're not actually making active compliance decisions, like to stop a transaction or allow a transaction. You just let everything go through, but at least you're sending information across, so the other side can make an active decision on it. And then it's a slightly more involved, but not that involved way of doing full active compliance. But everything you need to do about managing the risk about transactions, setting up rules for managing transactions, you can do on our side. And just through this small little integration, you don't have to go in and really fight with the technical team for resources, which is a big problem for compliance teams.
Yeah, the compliance officers must love that. It's a quick way to to get in compliance. What is the kind of general state of regulatory affairs right now for participants in this industry, startups and incumbents? I mean, presumably there are a lot of companies that are actually just not doing this right now. So what does that look like over the next year or so in terms of getting into compliance, and how serious of an issue is this?
Yeah, the companies that have been most eager at implementing it now are the ones where the regulators are making this a requirement for getting a license or maintaining a license. So Singapore is one, Switzerland is another. The Netherlands, they've recently started making this a requirement as well, and it's rolling out broadly. FinCEN says this has actually been a requirement in the US since 2013, since any exchanges is an MSB, and any MSB have to implement the travel rule. They say they don't really need any specific extra guidance on this because it's the law, right? But that said, US-based exchanges have kind of taking a kind of slow approach to it, pushing in a little bit. And from our conversations with FinCEN is extraordinarily frustrated with this slow process for it. And I do think it will probably suit people to start taking a little bit more serious, starting implementing it sooner rather than later, not like Q1 rather than Q2, particularly not Q3. I do not think it would be a good idea to wait that long for a US-based company or EU-based company. Really, any of the large major economies, it's going to be a requirement over the next year, for sure.
And are stable coins a big piece of this in terms of what is driving some of this participation and the surge in new exchanges and brokerages and incumbents that are moving into the space? Is it being driven by more than just Bitcoin and ETH?
We definitely see a lot of people that are using stable coins as part of managing, for example, new settlement systems. We see a lot of that in Singapore, for example, but quite a few other places as well, where a lot of these regulated institutions have stable coins. Like down here in Switzerland, Bitcoin Suisse, for example, they have a stable coin based on the Swiss franc, right? And so all of these, obviously you have to implement the travel rule for all of these stable coins as well. And I believe in Singapore, a lot of the ones who were actually more on the payments side, they were actually the first to have a requirement for it because it was already part of their license that they had to do it. So they were some of the first to actually start implementing, and then they have a new license for more crypto-oriented companies. But a lot of the companies that had this more generalized payment license, they were already using it with having stable coins and those kinds of things integrated into payment infrastructure. So they've had to solve this fairly quickly. The other area that we're seeing a lot of interest in is a lot of institutional players are. Yeah, I mean, I'm sure a lot of them are. You probably have bigger insight in this than we do. I'm sure a lot of them are offering Bitcoin for their customers and a lot of these kinds of things. But what they often talk to us about is securities offerings, those kinds of things. So there's a lot of interest in, now we've got the custodial service running, all of those kinds of things. How can we actually start tying it into more kind of products, such as token issuance, like security tokens, those kinds of things. And of course, all of that requires travel rule, different kinds of things, all of these kinds of things to be in place before they can do that.
Yeah, certainly from my perspective, the institutional participation in Bitcoin and to a lesser extent ETH, but probably also just US dollars, that use case is driving a lot of it. Security tokens are interesting because I fully agree with you. I think there's oddly just a lot more regulatory complexity around some of those use cases, and the SEC and FINRA have been less active in approving ATS venues to facilitate the secondary trading in some of those devices. But who knows? I mean, with the with the new kind of changing of the winds at the SEC, it's quite possible that we'll have more innovation that becomes possible as a result of regulatory clarity on the token front. So that's something I'm definitely optimistic about.
I also think travel rule isn't just about doing a crypto transfer. Like as it's, if you look at it in general, like if you just take the step up and don't just look at directly at the requirements. What it is about adding a counterparty layer to a transaction, right? Who are all the counterparties and intermediaries involved with this particular transaction? Now, if we now add a security token to that, now we have a whole bunch of different kinds of parties we can add to this, right? So we have who's the issuer, who are the different intermediaries or service providers, custodials, whatever, who were involved with the issuance of this token, all of these kinds of stuff. And if you're operating on public blockchains, you don't necessarily want all of that information on the blockchain, but through something similar to the travel rule, you can use the travel rule as a way for adding other kind of information for managing counterparty risk and managing many other kinds of risk. So we actually think that there's a lot of interesting things that the travel rule opens up for us. If we stop looking at it strictly this damn checkbox we just have to fill right now, because those regulators want us to make our life difficult. I think it can actually start opening up for a bunch of new applications, bunch of new products, and like really build trust in a whole bunch of different kinds of things. Because if you add information about token issuer in there, then you can start really scaling up a lot of information, a lot of risk management.
Yeah, and how do you think about that as an entrepreneur in terms of you have this great initial wedge product, which is really selling a service that people need. It's like the ultimate painkiller that people will absolutely have to get in compliance with. But how do you think about the addressable market for where that goes in terms of other types of services?
So the odd thing about the travel rule is that it builds. It's like if you look at people in traditional banking and say, so which travel rule provider do you use? And most people like look, Swift maybe, I'm not sure, right? That's kind of how they do these things there, right? And if you look at Swift, Visa, MasterCard, all of these payment systems, they're not about settlement. They're really about exchanging information about like metadata about the payment. And this metadata, yes, it's used for regulatory, for AML, it's used for fraud, all of these kinds of things, but it's also used for, figuring out who this merchant is, that just charged me, figuring out how to send a payment. I think travel rule even opens us up for things like pull payments, subscription payments, those kinds of things. That can be done now in a way where we can manage risk around it, which you just can't do if you're just doing it directly on the blockchain. So there's a lot of different ways that we can take this and start innovating. But it in some ways it takes really, yes, you're in the middle of this panic right now. You need to implement this kind of thing. Let's get this done as quickly as possible. And then we're trying to really show people that it allows you to do new things within your product that you couldn't do before. And this is actually, what I'm really excited by this. I mean, obviously I've always jokingly, I was writing a bunch of blog posts like many 10, 15 years ago, like trying to teach people programmers to avoid programmers going to jail for writing stupid code and those kinds of things. And I don't want people to go to jail or get fined or all of these kinds of things. So it's important. Compliance is super, super important here. But once you actually start learning what this technology is, you can start building applications that can really compete with the traditional world when it comes to these things like tying counterparty to it. And I believe very strongly that this has to be done in a way where it's the permission sharing of data, and none of this private data should ever touch the blockchain. And with that, I think it's completely compatible with public blockchains. And I think it's a requirement for really to getting blockchains up out of this speculative kind of thing into actually getting to some of the usage scenarios that we were always talking about. And I very clearly remember having 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 discussions with people like in 2012, 13, hand waving away a lot of these guys. No, we don't need information about the merchant. You just trust the address. I've been using Bitcoin for 10 years. I'm scared every time I paste an address in somewhere. I'm scared. Now, if I pasted that address in, I immediately got, oh, this is going to my Binance account, right? And I'd feel a lot better and a lot happier, doing this, right? Being able to do these kinds of transactions. So once you start seeing what we can actually do with this, I think it's going to be better for the industry. I think we can grow the industry. And one other point I have, and I am a little bit passionate about this particular aspect of it. But when people say that, blockchain is permissioned, we can't have things like travel rule or KYC, all of these kind of things. Blockchains themselves are and should be permissionless and public, for sure, 100%. I'm as much a libertarian as the best, crypto Twitter kind of people or whatever. I believe in the permissionless innovation on Bitcoin. However, if you also believe in that, you also believe in that a person or a business wanting to operate on the Bitcoin should not be required to do a transaction that they don't trust in, right?
Exactly. Yeah, exactly right. I think it's a very first principles line of thinking there, that these are public permissionless systems that people are empowered to use however they want to use them. And if you want to have a relationship with a custodial brokerage, that custodial brokerage has the ability to make their decisions on how their customers, act on the platform, and they will be presumably in compliance with local regulation. And so, it builds from that first principles. And I think it's your point earlier. Chainalysis has been a somewhat controversial company in this area, but they've done such a great job in terms of just promoting education from the regulatory side of the house, and really advocating things like the ability to have self-sovereign ownership. They're not telling regulators to shut down the ability for users to hold their own keys or to get away from hosted wallets or anything like that. So I think there's kind of this vocal crowd maybe on Twitter that doesn't understand that, but I agree with you.
Yeah, I mean, it's exciting. No one's like, I've been at a lot of the FATF, meetings. I'm not sure if how much of that is supposed to be kept inside there, but I think I can say that no one has been out there defending unhosted / non-custodial wallet more than Chainalysis has done, and really with them, there's not that much of a risk in allowing peer-to-peer transactions, right? It's just that point between, the businesses who build on it. I think this is actually, we talk smack about the regulators in the industry a lot. And and there are some regulators that, you can talk smack about. FinCEN I remember when I read the 2013 guidance, I moderated a panel at the San Jose Bitcoin conference about it. And I was like, wow, this is actually really, really good to the industry. I could not believe that they said, oh yeah, we're not going to regulate Bitcoin. It's decentralized. But if you build a business on top of it, we're going to regulate you, right? Then you're just an MSP. That means that they have actually shown how open they are to innovating and to applying the existing rules and to it. And it shows the difference. There are some regulators who are, let's prescribe down to down, point by point, how you're supposed to do this, right? And that is very helpful in the early stages. If you're trying to get a license, okay, we need to do this step one, follow exactly what they do. But as technology changed, these specific steps changed, and then the regulators, it starts getting slower to update. And FinCEN, I think, have been really good at saying, this is what we want. These are the overall rules. Now figure out how to apply it to your technology, right?
Yeah, and hopefully that continues to be the case. I mean, I think at least in the US, there's kind of a pattern matching between the early days of the internet and the Telecommunications Act of 1996 and how that really opened up the commercial web. And there's the ability to do that. I mean, obviously there's the darker side of this where something crazy could happen and there could be enforcement actions and they could go after self-custody or something crazy like that. But I think you're right. I think we have some forward-thinking regulators out there. Certainly in the SEC, that we've had Hester Pierce really been on the bleeding edge of this industry. Like, it probably understands it to a greater degree than any other securities regulator that I've read. I mean, probably more bullish on certain pieces of it than even certain crypto VCs. So hopefully that continues. Well, Pelle, this has been great. Where can we send people to learn more about Notabene and to get in touch? You just raised some capital, so presumably you're going to be hiring.
Yes, we're definitely going to be hiring. You can go to our website, which is Notabene, NOTABENE.ID. And from there, you can learn all about us. You can, if you're, our mission is to really give people the confidence to perform transactions. And initially, this is going to be crypto exchanges, regulated exchanges, banks wanting to work with crypto, those kinds. But it's also ultimately about allowing everyone to have trust in transactions and users as well. And if you believe in this vision, we're very, very interested to talk with you. We're particularly looking at front end, back end developers, typical kind of crypto JavaScript kind of stack. But please, if you really believe in the mission, that's probably the most important thing, and that you are able to work hard in a global internet, in a global crazy world like we're working with. We're a very remote team all over the place. We're ex-Consensus, all of us. Please come join us. So back end, front end, and we're also starting to look into certain ops roles that we are looking to hire, particular in the Far East.
Awesome. Well, thanks so much for joining us, Pelle.
Thanks a lot, Matt. It's been great.